Good Monday morning. Thanks for joining us. I'm Marlon Bowling, your tour guide to the ag commodities. Glad you're with us. And we had a bit of an exciting close to the overnight Globex trade. I want to take a look at some of these prices here and get your thought on this. Let's go to the big board and take a look at this corn market here. We had the September contract actually coming back to go 6.5 cents higher at 4.93 3/4. And look at December. Well, isn't that interesting? It's back above $5, $5.75. That was up 6 1/4 this morning. Now let's look at soybeans. They were the leader. How about August, going up 27 3/4 cents this morning, all the way up to 14.55 1/2. That's about 4 cents off of its overnight high. Look at where it had the low, and I have to tell you, it was a very choppy open last night. Gosh, I watched it open up. It surged ahead, and within the first minute of trade, it went from its high of the opening range to the low of the opening range. In 1 minute's time, it changed 12 cents. So that'll give you an idea of what it was doing overnight. It sold off then, and then it started to rally after about 10 minutes, and it rallied into the close this morning. So August up 27 3/4. November was up 21 this morning at 13.38 3/4 after a bit of a wild night. On the wheat market in Chicago, September ended up down 1/2 cent at 6.49, but that was off of its overnight high by about 8 cents. So keep that in mind. In Kansas City wheat, you had September down 1 1/4 at 8.17. Also, that one was 7.5 cents off of its overnight high. In spring wheat trade in Minneapolis, September up 3/4 at 8.48 1/2. That was 7 cents off of its overnight high. The cotton market has a last trade on December of 79.91 per pound. That would be down 126 points. Well, I want to call on Mr. Brian Hoops. He is the president of Midwest Market Solutions, and get his thoughts on what was driving the market overnight. So I just want to go out on a limb here and take a hunch, Brian, that we're back into a weather market again today. What's going on?
Yeah, good morning, Marlon. We are in the weather market. You know, we were fairly lower on Friday in corn and beans, dropping pretty hard. Anticipation of what was going to happen over the weekend as far as widespread rains. And overnight, we were, of course, higher, as you mentioned, and early this morning we're higher because those rains maybe were more spotty than what was expected. Some areas did receive good rains, but a lot of areas missed out. And so we're, trading that weather forecast. Now, you look at longer term forecasts, maybe there's some hints that we could see hotter, drier weather return, which would definitely hurt the soybeans. But here in the near term, it looks very favorable for corn pollination and for the soybean crop, which, does need some moisture. So we're looking at crop condition ratings this afternoon as kind of a driving force. Expectations are steady at the worst case scenario to maybe 2 to 3% improvement in both corn and bean ratings. So if we get any type of a rating that is negative, where we lose some ratings once again, it should be perceived as kind of a bullish surprise to the trade. And then, of course, Wednesday, you have the WASDE report. And you look at the pre-report trade estimates, we've been mentioning that, the corn market has a lot of room to make adjustments. USDA is expected to drop yields of 5.5 bushels per acre down to about 176. And even if they do that, there's very, very little changes to the U.S. ending stocks. They remain virtually almost unchanged, maybe just a small increase. Whereas soybean ending stocks tighten significantly. We could see, yields maybe stay even to a small decrease in soybeans, and ending stocks are going to tighten up because of what the WASDE said as far as planted acres go and quarterly stocks on the June 30th report. So it looks to be, very friendly soybean report, and I think we're going to trade that bullishness going into the report early this week.
Well, I know I heard from some folks in, let's say, the western part of the Corn Belt, and I'm sure you saw that drought monitor map from last week. There are still some areas of extreme drought in the western part of the Corn Belt, and where they happen to miss the showers, they were so frustrated because they said the dryland corn is just toast. It's already done. They said there's no recovering at this point if they get rain. So they have a hard time listening to all the other talk about rain in other parts of the Midwest, and I completely understand that. I've been there. But it makes it really hard to do any marketing too, doesn't it? Because you don't think that you're probably going to get much to sell. It makes it hard to hedge. You don't want to overbook, right?
Right. That's a very frustrating part when you see the markets going down and your crop in your fields burning up. It's incredibly frustrating for producers. So it makes it difficult to know how much of the crop you want to have sold ahead of time because you really don't know what type of yields you are going to receive at harvest. So it makes it more difficult. There's some strategies to employ. Maybe instead of locking yourself into cash sales, to do some sort of hedges or option strategies to at least lock in a price level. And then kind of leave you with some flexibility for your sales at a later date. But yeah, we've heard a lot of reports, especially in that western corn belt, where it's a little too late for the corn crop. Talked to clients in Texas this morning; they're going to be harvesting by end of the week or early part of next week. So there's a lot of crop that's coming along with maturity real quickly in Kansas, here in Missouri. A lot of the crop's been tasseled for a week or two, and yields are pretty much being set right now.
Wow. Okay, thanks for the update there. We'll come back and talk a little livestock market action right after this. All right, we're back with you, and we're talking with Brian Hoops. He's the president of Midwest Market Solutions. He hails from Springfield, Missouri. What did you hear when we wrapped up last week as far as cash cattle market activity? I'm just hearing all kinds of reports with prices all over the place.
In the north, it's been historically in the last year or so been much tighter supplies, much higher cash trade, and it was the same for last week. Southern Plains was virtually steady, maybe $1 softer, around 178. But in the north, we had some 178 up to 182, 292 on a dress basis. So we're pretty much at least steady, if not $2 higher. And so it's certainly a different market compared north to the southern plains. This week it's going to be extremely hot in the plains. We're looking at 100-degree temperatures 2, maybe 3 days this week before it cools off, and could stress a little bit of cattle. Maybe we'll see some early to midweek cash movement in the southern plains. But right now, we had a big rally in the futures going home on Friday. Maybe give a little bit of that back in early dealings this morning, kind of thinking that we overdid it to the upside given where the cash markets are trading at.
All right, so let's take a look at where we finished up last week then, and let's go to the big board. We'll start with the live cattle trade here. These are quotes provided by Bar Chart. It had quite a run on live cattle as we wrapped up last week. We had the nearby August contract gaining $2.42 as we headed into the weekend. So that put that final price at $177 even. That was only 20 cents off of its high. October up $1.95 at $179.37. That was a dime off of its high. In feeder cattle, we had August up $3.15. Wow, $245.42. That was a big time comeback after selling off very hard for a couple of days last week. September closed $3.27 higher at $248.60. That was the biggest gain of all the contracts last Friday. And on the lean hogs, we finished up that session with the August contract $1.97 lower at $95.15. But it wasn't all that way. If you go out to the winter contracts, December was $2 higher. February was actually 10 cents higher. And Brian, if we can take a look at the beef cutout values that were posted by USDA last Friday afternoon, they have really been slipping here lately. And they were down $2.97 Friday at $316.90, and selects were down $4.34 at $285.63. So that'll be a little bit of a weight around the neck for the futures market too. Brian, great information. Thank you, sir. You have a good Monday. Appreciate it. We'll talk with you again. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Well, this has the makings for an exciting open today. Like any other weather market, here we are on a Monday, ready to go.